Hey, Steve, Andy, what's going on today?
All right. Hello, Scott. Happy Tuesday. Thank you. Hello, Andy.
Hey, Steve. Hi, Scott. Hi, everybody.
All right. So the whole gang is here again for the Tuesday webinar trade of the week. You know, we do have our test drive coming up next week. And good news, bad news. I mean, bad news if you love these afternoon webinars, we're not going to be scheduling those next week. But the good news is we're going to be live for at least an hour or so during the day, each day. So you can keep an eye out. If you don't get an email, you can always ask for the link. But it'll probably happen around noon Eastern each day during the test drive. We'll just open up and no content on our end. We'll just let the questions fly, and that's usually the best way to go for test drive because people come in and they got a lot of questions they want to get going fast. Much like the question I see there from RV, how do you look for stocks and what input should you use? That's a loaded question, RV. There's a lot of things you can do. There's not much input in trade ideas other than the configuration of scans, and we wait for the scans to tell us what is showing up of interest. But nonetheless, we'll talk about some things here today that Andy and I have planned. Welcome. And just the opening slide, these slides for a few minutes. The disclaimer of the trade of the week: we are not registered investment advisors. We're not brokers. We don't have the patience to take those exams, nor do we really want to manage other people's money or give them official advice. We're just our own independent traders and thinkers and employees of Trade Ideas as well. Anything you see or hear today is really just our opinion, not to be taken as literal financial advice. So that should make the lawyers happy. You're not alone with Trade Ideas. This is really our 17th year of using, or in production, I should say, for this product, and I've been using it all 17 years since the beginning, and I've seen a lot of changes. And it's a very in-depth program, so that's one of the reasons we extended our test drive from 5 days to 10 days, so that people have a little bit more time to help themselves get acclimated and learn the potentials of the program and help shorten the learning curve. Some of the ways in which we do that are these webinars for sure. We have a lot of videos. We have Barry's live trading room. He often reminds us to send people into his live trading room. It's free. And he can help demonstrate or help you solve a problem or show you something. He's always going over there in his live room. That's a good deal. We've got the afternoon webinars. We have the Friday support session, and this is kind of what it's going to be like all week next week. Every day we're just going to be kind of open for business for an hour, a little bit more, letting people come and pull up a chair and ask questions and get support for the things they might be needing help with. And visually is usually the best way to go there because the telephones just, they get lost. And when you're trying to help people with scans or software over the phone, phones are good for accounting though. There's the afternoon webinars, as I mentioned, and the Friday support session, but also we have the Trade Ideas University live classes every day. Those live classes are probably going to morph into recorded classes, and we're going to start doing much more of the live support stuff that I kind of been talking about. All right, let's see here. All right, here's the old slide. Man and machine combined, human and machine combined, what have you. Just a reminder that we can't rely on machines to do it all for us, and we can't really do it all on our own either. We kind of need each other. So the machines like Trade Ideas do a great job of carrying ideas that we've programmed, and maybe we didn't program. Maybe they're the AI ideas, which are AI generated, machine learning generated from hours of back testing every evening and millions of back tests a week. The AI comes up with ideas as well, but nonetheless, the machine serves up the idea, and we, the humans, take it from there. And that's really the way it's going to be going forward. Let's get started here, and I'll just quickly try and address the question. I think we have a, don't we, Andy? Don't we have a low price?
Yes,
I'm trying to see where it would be. Bang.
I think toward the bottom. Yep.
So, and you need to send those files in. So, all right, send the email message. If you do, then we can show you a few ideas. A new tool is coming out, and it's the Anchored VWAP from our friend Brian Shannon at Alpha Trends. He's going to be sending some people over for the test drive as well, and we've got the Anchored VWAP tool. I'll be demonstrating that and how to use it and why it might be a pretty cool tool. All right, let's just get started here. Why? I can't remember, but if you have to remember, Andy and I were talking about something we called bearish divergence, where I'll just draw it. You know, we had kind of a RSI line in here and then a bit lower like that. Well, you had higher price there and a higher price there, but we were noticing that the oomph of the market, the RSI, the relative strength, the stochastics, whatever, the momentum indicators, oscillators as they're called, was diverging. It was making a lower high as the markets were making a higher high. And that was kind of the case across the board in Apple and in NASDAQ as well. So we didn't say that, you know, get short, but we definitely said keep an eye on the market, because that's a little precarious, and that's when things can kind of sneak up and the air gets a little thin and maybe the wings of the airplane kind of lose a lift for a little bit. And wouldn't you know it, just a day or two later that happened. We had a miserable Friday, and we had a big gap down over the weekend, obviously probably related to the influenza coronavirus breakout. I mentioned in January here, because this is a crazy ass market, okay? Ugly day. It was an outside day on Friday and Thursday going into the weekend, big gap down, and then we closed with a really ugly candle, a big topping tail candle. And I really thought we might have a little bit more downside, and we even called a target down here of about 230 in the spiders. But just the way this market loves to disappoint people sometimes and catch people on the wrong side, for whatever reason, we gapped back up and pushed pretty high, but closed off highs. So we've got kind of a filler panel here, if you will. You know, we just kind of took care of yesterday's gap all in one big candle later in the presentation on how to maybe gauge what happened here. But the point is, I want to do, market was looking a little precarious, and it did kind of give off those vibes that Andy and I caught up on. And we also did do a little bit of hedging. So we're going to talk about that as well, because hedging essentially is, if you don't want to sell your great longs, but you kind of feel something like this might be coming, there's a few ETF vehicles out there which you can buy and add to your portfolio, which will soften the blow. So yesterday, if you had a good hedge on, you might not have lost a lot of money in your swing trade longs. And then conversely, today as we bounce, your swing trade longs bounce back. But if you still have that hedge on, it's kind of a neutral, you know, no push, no win. You don't really catch the bounce. But when they work, meaning if we had additional follow through today to the downside on that 50 period moving average down here, we would have had some nice hedging benefits that we'll certainly talk about. So I don't have a whole lot to say about the market other than it broke. We said be careful last week. Something like this could happen. And when this happens, a lot of the individual stock names and charts break. And because of that, I probably don't have a whole lot of alerts we can set today for setups. But I think we need a few more days of data to show us what the direction the market wants to go. If we want to get caught up on my favorite indicators, yeah, you know, the 10 period indicator held here. It held the day before that inside day. And then we broke and we closed below it. And what I always say when we close below that 10 period indicator, watch out below. Well, we did get a pretty big watch out below, but we bounced right back up to and just above this 20 period. You know, the closing wick kind of gives us a bit of space up there. So it's too soon to say, oh yeah, you should have bought the dip and we're all right back on track and every dip should be bought and here we go. No, because Andy knows, and we've talked about it in big downdrafts, some of the biggest bounces can occur in those big downdrafts as the people who were all conditioned to buy all the way up finally start to think and feel that this is on sale down here, and if we don't jump in, we're going to miss out. And so you get some big bounces, but that doesn't always mean those bounces are the resolution to the issue at hand. We need a few more days to kind of work this out. And again, I'm going to tease you. I'm going to come back to the SPY chart a little bit later with another indicator to show you a different perspective, and it also lines up. Well, talk about that 10 period moving average. Here's the NASDAQ really playing it perfectly for the most part. Bounced off the 10 period on Friday. We closed below the 20. This was really ugly yesterday, but what you talk about a stick save. For the most part, for the moment, I mean to say, for the moment, we have bounced back into, and if you look at that, it's kind of funny, and the 20 period on the bottom wick. I'm telling you, it's more than coincidence sometimes. Those are waypoints that the market-making algorithms, I think, have programmed into their algorithm strings. But nonetheless, we'll move on. The NASDAQ, by the way, the Qs were the ones that led us higher. If we're going to roll over, we're going to watch them first. I'm not saying we're going to roll over, but if this doesn't hold and the sellers come back, what I'm saying is watch for the Qs to possibly lead the way if that happens. If that doesn't happen, they'll probably continue to lead the way back up higher. All right, so we have, let's see, comment by Bill real quick. If you go back to 1224, you have had declining volume on the daily and weekly charts. I think might be right about that. There's the 24th he's talking about. That line in the center is average daily volume. So for the most part, most of these days have been under that average daily volume. You're correct, Bill, except for the couple of days on the downside. And that's just the way the market's been for the last few years. It climbs on lighter volume, has a couple of fits on bigger volume, and then seems to just dig in and find its way. But we'll come back to that. Lastly here, the IWM, we talked about how this thing was a lagger, and it still was a lagger, but it's just a mess now. It hasn't really gotten too far out of the way. It was one of the first indexes to break below its 50 period, but it's bounced right back up today. But this is what I start to see. You know, I start to see these moving averages curling over, and that's going to be a tremendous headwind there for the IWM. Let's look at what that might be for the S&P. I'm going to see tremendous headwind here coming in on this 10-period moving average as it starts to roll over. And lastly, the NASDAQ. And we already saw it today. It kind of kept a lid on price action today where it was support on price action on Friday. So that becomes a curious pivot level that we can keep our eye on. If the market can get, let me correct that, if the NASDAQ can get back and close a green candle, not a red candle, but a green candle back above that moving average, then it's time to throw out all concern and bear cases again. This market might be digging its way back higher. Apple was of note. You know, I think the treasuries were of note, at least yesterday. They gave some back today. Interesting wedge that I saw, technically speaking. Price action tells the story. You don't try to make your own story, but you know, this is an interesting wedge that the treasury market, TLT ETF, broke out of. Gave a little bit back today, but we'll keep an eye on that as well, because you know, people start to lose favor in stocks, they're going to start to gain more favor in things like TLT. Other than what I'm going to show in a little bit, anything else you wanted to add, Andy, on the market commentary?
Steve, I think you hit it. I think you kind of hit it on the nail. I know a lot of people kind of get euphoric because Apple, you know, did beat earnings and they're kind of gapping up. But it's, you know, be careful with that one tomorrow because it's had a 30% move since its last earnings report, up probably 110% since January of last year. So this may be one of those scenarios where it is priced in because of the big move it had before earnings. Of course, it does have a big impact on the Qs, not as much on the spiders, a little more equal weighting over there. But yeah, you know, it feels, you know, like a market that could be getting tired. But hey, it's been feeling that way for a while. So just kind of have to wait and let the price action. Tomorrow should be a interesting day to see what happens.
I agree. Tomorrow and maybe one more day. Also, tomorrow is FOMC day. Not that that really matters anymore. I think the market is actually expecting a quarter-point cut. That'll probably keep the safety balloons, swim floaties on the market. Okay. Anyway.
Yep.
All right. Well, whenever you want to talk about AI, it's your turn.
All right. I'll talk a little bit about it today. Not a whole lot going on as far as to talk about, but let's go ahead and do it. All right. Well, what I have up here for you guys, especially the ones that are new, it's what we call our AI and what this does. Okay, this is equipped with probably about 45 strategies, and each night it takes those strategies and optimizes them and backtests them over and over, and it's looking for a certain percentage and profit factor. Although this is our new baby Neo, and this is the one that Steve and I and a lot of the guys have been focusing on lately because it has been the best performer over the last couple of months. And what this does, it looks for high relative volume. Okay, so if I click on CIT today, you're going to see the relative volume in this was almost 5. So basically 5 times normal volume. Another one here, almost 6. So even though the other two performed a little bit better today, I want to stay focused on Neo because we are getting right into the heart of earnings season. It's going to be coming fast and furious over the next few weeks. So I think this is probably one you want to keep your eye on. Last earnings season, it did perform very well. You know, we've only had basically a couple of weeks of earnings season so far. That was really, well, we have a lot of it. So it's going to be getting, you know, like I said, they're going to be coming fast and furious, you know, many each day. So this is one you want to keep an eye on. So I'm going to stay focused on it today. Just because there's so many trades, I don't want to sit here and go over, what is that, 17, about 23 trades. So let's don't get this thing full of trades and me dissecting them, but let's take a look at a couple of Neo today, what she called out today. And let's take a look at a couple of winners, and we'll take a look at the couple of that didn't work as well. Okay, this is CIT. Okay, you can see the call here. This is from a pullback long, and the stock had a nice little move this morning. You see on the daily trying to break out of several months there. Holly kind of pegged it beforehand on a pullback. There's your buy signal. And then what happens, you had a pretty nice move, a kind of a no pain trade. In other words, as soon as she makes the call, you may have pulled back a little bit in that bar right there, but we had a nice move. And then what happens when you see this shaded color, let me take it off after hours right here so you can see it better. Okay, so when the shaded color turns from the darker theme to a lighter theme, that's where Holly exits the trade on, in this case, the exit reason was profit save. In other words, she's equipped with an algorithm. If she gets X amount of percentage in gains, she will not let that all return and go all the way back to zero. She'll get out for whatever, the exit reason called profit save. In this case, you know, in my scenario, I have it set for, let's take a look. If I go to tools, options, you can see how you can set this up. My AI trade size is $100 risk based on stop loss. So what that means, okay, every trade comes with a stop. You can see it on the chart here, okay? So the AI will go out and buy you the number of shares, in this case it was 120, so that if the price does go to the stop, the most I'm going to lose is $100, okay? So you can make this whatever value you want to. You can see our other parameters you can set in here as well. You can do it based on dollars per trade, shares per trade. I like this one right here, as most of the traders here at Trade Ideas like. Because you know you're limiting your amount of losses in this case. All right, so this is a case where if you got out for profit save, you made $100, but if you held the trade to the close, this is what the moderate column will calculate. If you did hold it to the close, you would have made $144. Okay, the next one's LAUR, and I think this is one that took off and is flattened all day, if I remember correctly. Yeah. There's your buy signal early in the morning. Looks like it was 8:38. I'm on Central Time, so that's 8 minutes after the bell. Got your buy signal. Had a nice 35, 40 minute move, and then just kind of plateaued. There's the exit where you have the shaded color. That's where your exit was, and then it just kind of flattened out. You can see there's not too big of a discrepancy between the conservative and the moderate price, which means it basically closed where she exited. So not a lot there. Now let's look at something that didn't work. I like to be fair here. Okay, ALV, this is one that was nasty from the get-go. Okay, the volume was there and it just had a nasty move, unfortunately. And you get this sometimes. You get algos involved, ran it up, there's your buy, and they just jammed it right back down, stopped out in the same 15-minute bar. Okay, only a 7-minute hold on that one, and got stopped out for a loser. And unfortunately, this did go sideways and finally kind of broke out to where it could have been a flat, you know, if you look at the aggressive profit. Aggressive, I don't focus on this too many, because what this does, it ignores the stop. You can see right here on this ASH hash, if you held this to the close and you ignored the stop, you would have lost $157. But I like this moderate probably. This is the one I like the most, where it adheres to the stop. In other words, once it hits the stop, it quits calculating. So if the stock does bounce, it's going to still freeze at the $100 level. But that's the other big loser there in ASH, and kind of this one never did recoup. Okay, it looked great on a daily chart, but breaking out there, if I draw the line on the daily, wait, I want to do that. if I draw the line right here, you're going to see it had a nice breakout, but it just failed. This one just failed. And typically in a situation like this, I will cut them sooner if you know, if you get that action right there and then it comes back down to you know, near lows, which was actually where the stop was anyway. All right, but you know what? Nothing really. You can see right here in my case, okay, because I'm using that stop loss or the stop based upon or my loss is based upon the stop. I actually, in conservative mode, would have made $48. But you can see over here, Holly Neo, it's showing a negative $68. And you're saying, why the discrepancy there? Shouldn't it be the same as yours? Our channel bar calculates based upon 100 shares per trade. Remember when I pulled that up in my tools? Let's do it real quick. And I'll show you what Holly does here. A trade size, she does this right here. That's the way the channel bar is configured, whereas mine is figured like that. So all in all, you know, kind of a ho-hum day. Now, this is not usually the case. We have a great track record of, you know, beating the S&P, but for some reason, yeah, today was probably because of the action we've seen lately in the market. A lot of uncertainty, I think, out there. But anyway, nonetheless, it's kind of a flat day, slightly up. All right, Steve, I'm gonna shoot it back to you, unless you have something to add.
No, I was just remembering that one great day that Neo had, but you and I were in the annual meeting. We couldn't talk about it.
No, that's right.
Yeah, we were all looking at those numbers laughing.
Yes.
All right.
Yep.
So it's just the way it works.
Mm-hmm.
Question snuck in there. Why is it not advisable to invest equally in all 4 AI trades of the day equally, assuming we get free trades eventually? Why is it not advised? It's not advisable. I think you can definitely spread out the risk equally. Let me just give you an example, friend. Somebody doesn't like today. Neo didn't take more than 9 trades, and I had never really seen it take more than 9 or 10 trades, to be honest. So, if you wanted to take a $30,000 account and make sure you got all 10 trades, you could apply $3,000 risk to each trade. And if Neo came out with 9 or 10 trades, you'd be using your full buying power. But you got to kind of anticipate ahead of time. We never really know if Neo's going to have 10 trades or 2 trades. But your question was, why is it not advisable to invest equally in all the AIs? I'm not sure if Andy said that. I don't think I said that, but I don't agree with it. I think you can invest equally however you want.
Sure you can. Yeah, you have the option to turn on any strategies that you want from any segment and invest it as you wish. Yeah, that's about as plain as I can say it.
All right. So the trade of the week this week is SDC. Let me just zoom out a little bit, open up. Now I got to tell you, remember, this is what the backdrop of the market looked like as we went into the weekend and we started looking for some trade ideas, trade of the weeks. And the last thing we wanted to do was just say, hey, jump on into a trade on Monday morning and get long, kind of like we did with Peloton a week ago. I'll get to that in a second. We wanted to make sure that this trade this week, with the market being the way it was, if we had additional weakness, we wouldn't really want to necessarily be long a stock. And so we looked for something that definitely was going to have a breakout. And so, of course, yesterday with the SPY dipping way down, our SDC did not trigger. There's the blue line the weekend as the article was sent out, using the trigger, the blue line there, which is the high of Friday. So we figured if the market did decline more, it would probably not trigger that blue line taking out highs from Friday. It might take a day or two for this thing to set up. Look at all that space. It was a bit of a green apple, so to speak. It wasn't quite ripe yet. Maybe needed another day or two, but the market is cooperative. This hole and the bid is there and the market's creeping up and this thing triggers, well then have at it. It's your call. It just depends. I also said it depends on if it does trigger. If the market's rolling over and making fresh new lows on good volume, you probably wouldn't want to take that trade. But I think the big takeaway here is we were looking for a nice consolidation play. It would have been beautiful, if it touched that moving average, but we can't be beggars and choosers. We had a volatile day on Monday and it kind of really blasted down and took care of that dynamic, which I talk a lot about, meaning the down move, fake out, head fake first before the resumption of the up move, which is what we would hope for here, looking at nice volume like this with a nice push higher, another push higher, consolidation. I mean, all things being equal, this thing still has no reason not to go if the market participates. So keep it on your radar. Use the blue line price alert like I'm using right here, of course. You want to do that. Peloton. Well, you know, that was the trade of the week. Nope, that's P10. Peloton was the trade of the week last week. Remember, this is a rather new issue. It's only been out here since September. Had a little bit of funny PR laughability as the Peloton commercial took some abuse for saying that men were abusing their wives, putting a Peloton in the living room and saying, have at it, but whatever. That was the angle they were taking. But much like I was showing you on the TLT a minute ago, what we liked about this was the beautiful breakout. We had 3 days of a nice breakout, and that's when the trade of the week was called last week. Well, wouldn't you know, we got a nice run up, good 5% on the right off the bat, which is always fun, but then it reversed pretty hard. When we see a big wick like that, after a couple of downside wicks here, a downside wick here, and an upside wick here, upside wick here, I think it's not surprising that eventually we did get our downside. And look, we can even add a new bottoming tail. Now I want to bring into talk this bottoming tail here. This bottoming tail really was threatening because, as I recall, the Peloton trade said, do not let the trade close below the 20-period moving average, because the 20 period was what was kind of showing up as resistance back here. Resistance should become future support, and it did in hindsight. But in the moment, the heat of the moment, yeah, you're probably wondering, what should I do down here where this thing's on lows? And I don't really have any great check-off decision process for you when it's at these lows, other than it's how much time's left in the day. Can this thing still recover? Because this is what algorithms and market making quants like to do. They like to push the price around to extremes and find levels of insanity that they can exploit. It's just what they do. So the 20 period held that day. There was really, in hindsight, was no reason to get out. Now, I'm out. I got out. But if anybody is still in here, I'm out. That market scared the hell out of me. We still have higher lows in this thing. And this thing is, it's got earnings coming up February 5th, so about 7 days away. It's got a tremendous short float, pretty small float. There still could be in Peloton. So what I'm saying is there was really no reason to get out, even though I got out, because I got scared of the market. And this is going to be a great, transition here. Started doing some hedging. Before I go to the hedging, I want to stay on this chart and just kind of switch it up a little bit. I want to talk about, put hedging on the back burner for a second, because what I want to talk about is the AVWAP, the new tool. Some of you might have noticed that my charts look a little different than yours because I'm on a new version here. And on this new version, we've got this thing called the anchored VWAP, and we've got some new chart buttons up here. And as you can see, we have one that's an anchor. Well, I like all my stuff. I like my moving averages and whatnot. And I want to also start playing around with this anchored VWAP. Brian Shannon did a big presentation on it. It was last year, actually, I think, at our Trade Ideas event, but he's been talking a lot about it lately, and we finally got it in the system, and he's going to be probably bringing a lot of his people over to try it out for test drive this week. But let me show you. I've got Peloton. I'm going to zoom all the way out, and I'm going to get rid of this chart because this has all the stuff that I look at. I'm going to go to this. I created a new blank chart that I'm just keeping behind my regulars, and this is going to be my anchored VWAP chart to play around with. Let me show you a few things. First off, if you're not aware of the anchored VWAP that Brian's been touting a lot, and he's actually submitted an article or a white paper to the Dow Jones theory group, and he's competing for maybe some type of cool award for technical analysis and breakthrough. But what he's focused on is that the VWAP is obviously, it's a big value weighted average price. It's a big thing that the institutions use and big guys use as a measure as to how well they're getting their entries and exits through their brokers or through who's running their executions. And a lot of times that anchored or that VWAP, he'll kill me if I say WAP, VWAP will show up in price action. And a lot of scans we have, we can use filters for those. We've added some new ones, a 1, 2, 3, 4, and 5 day VWAP respectively. But now we've got it in the charts because that's what really is where it really shines. And let me show you. So you anchor off of a significant event. A very significant event would be an IPO, such as Peloton. A significant event might be a spike high or a spike low. A significant event might be a gap after earnings. So we take moments in time that are significant events for whatever reason, the price reacted and something happened, and we can kind of peg where those people are. Are they underwater or are they above water since that event? So here's how the indicator works. I'm going to just tap it once, and now you notice my cursor has changed to an arrow. I'm going to put this arrow over the very first day of trading, September 26th in Peloton, and look at what it draws. A couple of interesting points. I'm going to do one more draw. I'm going to tap it one more time. I'm going to put it on the high. All right. We have a couple of interesting things that popped up here. We could see way back here, that anchored VWAP, anchored to the first day of trading, was in fact resistance. And for the most part, closing prices gave us support off of the anchor. So everybody above this purple line is in the money. They're in the green since the opening IPO. Everybody that's below this purple line is out of the money if they bought that high back there. And it's kind of funny how it's also pinching down resistance. So this particular indicator, except for this little mess right there, is showing some correlation, and it's interesting. And the correlations you want to do are on things that are significant in event. Well, I've got another one to show you. Let's look at what I teased earlier, the S&P. I think a significant event would be year to date. Everybody that bought the S&P on January 2nd, the first trading day of the year, let's see how they're doing. Well, it's this day right here. So I'm going to highlight my anchor. I'm going to tap that day. Well, isn't that interesting? Even after all the lines I drew on mine, Brian Shannon's anchored VWAP from the first trading day of the year showed as support on Friday. And what did it show us today? A little bit of a catch net, a little bit of resistance. Found it. Did you know it looked like that, Andy? Or was that surprising?
The spies? No, I didn't. No, the spies.
Yeah,
I did not know.
I can hear the astonishment in your voice over there. So it's pretty interesting. You can't just pick a random day and say, well, they have to be significant days. You know, IPOs, earnings, giant gaps, things like that. But I found it very significant today that our price action ran right smack into, and once it got here, really wasn't that happy. It didn't know what to do with itself. Back up a little bit after hours from Apple, but for the most part, that corresponds to that anchored VWAP. So there's a kind of a line in the sand that's continuing to draw each day that's pegged to the first trading day of the year, and it takes into consideration the volume. If we did a really high day with very low volume, that line might not move very much. It needs a little bit of volume behind it to make that volume weighted average price move. So this is going to be available on the new version that comes out. We typically have a new version the day or two before test drive, which is next Monday. So if anybody wants to play with this anchored VWAP and a clean chart, you can kind of do what I did, just make a new chart and leave that simple. And by the way, the way you turn it off is two different things. We can go to modify and just click remove indicator, or by design, we can just clear that chart, go to the cues, come back to the SPY, and that line is now gone. So that's the way it works for now.
You're on the test server now, right, aren't you?
No, I'm on primary. It actually migrated to the primary server today.
Oh, good. I need to check it out then.
See, here it is right there.
Yep. Okay, good.
Problem is I'm running version 129, which nobody has. But this 129 will be available, I believe, by Friday. I'm glad that the bug didn't show itself. Occasionally, there's been a little VWAP bug that shows up, but Dave may appear is on top of it, and he might have another patch, another version. We might be running 130 by the time we get to the weekend. So that's cool. And then just to remind you, for those that do play with that kind of stuff, I'm going to do a webinar with Brian's group next Monday. I'm going to show them that we've got some interesting new indicators. We've got, like I said, 5-day VWAP, 4-3, 2-day VWAP in percent and dollars. And we could say, hey, I like this 2-day VWAP. I'll add this filter, and if the price makes a new low, and I can configure this VWAP filter to be touching as the new low comes out, well, that's a way in which people can start to use some of the filters we have as well. And I'm going to be showing that to his crowd for the webinar. So in case you're wondering what that little anchor is up there, that's the newest addition to our charts going forward.
Nice.
Let me show you something else. Sometimes when I do interesting moves, I try to mirror it in the paper trading mode. Just a small amount of VIX there. And we're going to talk about hedging. And right after Andy and I spoke to you guys last week about seeing that the bearish divergence and feeling a little thin air up there in the S&P, we had another day of kind of the same thing. I said, you know, I think it's time to hedge. And that's basically the day right there. Bought 100 VIX just as a little kind of a hedge in the other account, a live account that the four of us play around on to make sure we can't find bugs and identify things before they happen. Is the VWAP chart accurate? So I don't know about the VWAP, Stan. You'll have to get back to us on that one. I don't have an answer because I haven't been using that one, but I know there's been some issues. But we're going to talk about hedging, and this is essentially the what they call the VIX. It's a fear index. It's a index of the amount of S&P 500 puts being bought versus something else. I can't remember the formula, but essentially it's what they call the fear index, and it means when people start getting a little nervous or a little concerned, rather than just selling your positions outright, if you're a portfolio manager, you have to get back in, and that kind of sucks. So you can kind of change gears a little bit, put a raincoat on, if you will, and you can withstand some pullbacks. And so the volatility index will spike, as it did here. We held it for a day, we held it for a second day, and then it spiked. And now it's just kind of holding out up here. We're going to see what happens. If it breaks here and just kind of trickle lower, I'm going to have to sell it for a small profit. But if not, I'm going to hold on to it to try and offset any longs that you don't see on here that might be in your account that are getting crushed by the pullback in the S&P and the Qs in the last couple of days. So if this trade doesn't work, this bounce doesn't work today, and the VWAP levels hold and all that stuff, if we roll back over again tomorrow, this volatility VXX ETF is going to spike right back up, and it moves pretty darn quickly. I'll add that. So that's one way in which you can hedge. One of the ways Andy has always done it is using the SDSs, which is just an inverse of the SPY, but it's double. Let's take a look and verify that. So the SDSs were down 2% today, whereas the regular SPY on the upside should be up 1%. And there it is, an exact double inverse. You can buy that. And again, the beauty of it is, if you're not sure if this is the big one, but you want to protect yourself, you just add a little plug-in. And that little plug-in is the SDS or SQQQ or VXX. And then you can unplug that when it's time to unhedge and you haven't sold any of your original long positions. And that's kind of nice. That gives people a nice feeling sometimes, especially if you're wrong, like I might be, about this little pullback we have here. But we'll find out what happens. But nonetheless, I wanted to show you that, you can come in and do those types of things. And another great reason to have the paper trading module. If you're not trading a live account, you can play around with this kind of stuff in the paper trade module as well and see how they offset each other. But don't think that when the market gets scary and you've got a couple of core positions, you have to get out of them. You can do what's called trade around them. And trading around them means, like I said, a plug-in of a simple ETF. Andy does this a lot, and he actually got me into it probably a lot sooner than I could have. So is there anything you want to add on this concept here while we're talking about it?
No, man, you hit it kind of on the head. It's just there's, it's like I go back to my theory that there's nothing wrong with bottom fishing. I know a lot of people tell you buy highs and sell them higher. I'm one that really don't like buying highs. I'd rather wait for pullbacks. That doesn't mean I'm bottom fishing lows, but there's a way to trade. Like I'm in SDSs and have been for several days. And what I do is I scale into them. I'll buy a little bit to maybe hedge a position, and then if the market starts going in my direction, I'll buy a little more, maybe sell a few more longs, and sometimes I end up where I'm net short, which I have been over the last couple of days. Now we could get a big gap up tomorrow, who knows, and erase some of those gains. But for right now, everything's okay. But yeah, these are not ones you want to do because they can decay over time, and they do, they can be toxic. But if you're looking for like a short-term move for several days or even maybe a week or something like that, they can be great vehicles.
That's a good point. Especially the VXX is a very short-term vehicle because the decay overnight starts to show up really quickly. And Jeff's asking about how do you scale your hedge. I guess it depends on how bearish you feel. 1 to 2 hedge to longs if you're not feeling that bearish. 1 to 1 if you're feeling pretty concerned, I would imagine. So you can scale in and scale out. Like Andy said, sometimes you might buy the SDSs or the VIX in 3s or in 3rds just to see and wait for that next step of confirmation.
And one other thing I want to add too, there's usually something else that's kind of nudging me. I won't just do, I just won't look at the spiders and say, you know, we're at all-time highs. I feel like we're going to sell off now. I'm going to short and go short. I would never do that, but I was seeing a lot of bearish divergence in a lot of charts. And you start seeing things like that, some little indicators that that may kind of point to you that the market's getting tired, and then of course I won't go just all in like Steve. You know, I'll go small, and then you know
That was
I
a
think
two-parter. You saw it.
Mm-hmm. Yeah.
Yeah, it was 2 parts in VIX.
Yep, it sure was. And yeah, same way. And it was a 2-part for me in SDSs, and you know, so far so good. Hindsight, I wish I would have sold some at the open the day before yesterday, or I guess would have been Friday, but no, it would be yesterday. Yeah, at the open on Monday morning. But
Yeah.
oh well.
Well, Graham says he buys puts for hedging. Do you know if there's a guide on which ETF does that? Well, the VIX, the VXX, is essentially measuring the put action of the S&P 500. So people are just buying put index puts, and when that starts to really outpace, you know, the calls, that's when you start to get higher readings in VIX. So, other than that, a guide of which ETF does what, you best off just probably going to Google and maybe typing ETFs. For hedging, ETFs for puts, ETFs for bearish markets, things like that. All right, so that is hedging, just a concept as markets get crazy. It's something you can do. It makes you less skittish and less emotional when you're seeing a hedge on your screen, and the P&L just isn't really wildly fluctuating like it would have. It's calming. It can be nice. So before we leave, I've got just a few. I set a few alerts because there's not a lot, guys. The charts are kind of broken out there, and I looked through a lot and didn't really see a lot. But you know, there's a couple that I'll give out. I think I gave out a few last week. One of them did have a pretty good move to the upside. I think it was this one here, Trill. Yeah, because it was a low price stock. Look at that beauty. Actually, I did not participate, but nice push off of that consolidation and beautiful moving averages spread out. Very nice. I wouldn't buy it here. The jump rope is at the high end and it's probably ready to come back down. But nonetheless, see if we can find a few. I'll delete these, and I've got 3 for you. Yeah, Andy can probably drop you, Graham, a video on a Brokerage Plus. There's a couple of YouTube Brokerage Plus videos out there. He can drop one while I'm setting a couple of alerts here. I've only got 3, and I can't even recall where I got them all. I think a couple of them were for the like the pullback to the 20-day moving average. That would make sense right there. So this thing is making a higher high, higher low, higher lows, and bounced right off its moving average. Took out yesterday's low on today's open. Couldn't find any more movement. Bounced right there. I think this could be an interesting play. I'm going to just kind of eyeball this off of yesterday's high. All right, there's one. Yeah, Peter, I see your comment. I'll include those before we sign off too. The next one was TER. Similar kind of a thing, a pullback to the 20. A nasty second mouse gets the cheese kind of a play here. I'm going to go off of today's highs roughly, give or take a few pennies. And then the third one that I have to mark up and share would be MGNX. I can't remember where this one came up. Looks like another one, pullback to the 50 probably. I'm trying to find safe stuff here. So I'll go ahead and use that high right there from today. So let me share out a few things here before I do that. So we'll share these 3 price alerts. And then Peter asked about a couple of scans that he sees on my screen to share. I will put all of this in the chat window. Price alerts, paste. Okay, Peter was looking for bird in the hand. So yeah, these are just stocks that are pushing down, making a new low. So they're going to be good looking trade, good looking setups on the daily. The bird in the hand, see that low on the day, it pushes down, and that's that little push that sometimes I find is the interesting entry point. Jam down can be interesting on those. The bird in the hand is the same kind of thing, but it's more stocks that have been kind of sideways basing and looking for that little peck in the hand. But I think the jam down is probably much more interesting. So I will share both of those as requested. Okay, there's that one. And then we'll get ready to bring Scott in here in a moment after I hand out this next one. Looks like we are all caught up on some questions you guys had today. Copy that one. Bird in hand. All right, very good. So I think we're all caught up. So perfect. Let's bring up the slides and bring Scott back in.
Yeah, thanks, Steve. A couple items before we go.
What's that?
We have a test drive starting next week on February 3rd. You can get in it by going to trade-ideas.com/test drive. It's the best way to try all the premium features of Trade Ideas without committing. If you're a standard subscriber, try it out. You get to test all the back testing, the AI stuff. It's a great opportunity. The last one we did was 2 weeks long, and since that was such a success, we decided to do another 2-week one, and I think that's what we're going to do moving forward. Previously, they were only 1 week. The 2 weeks gives you a good chance to get very familiar with the paper trading, the simulated trading, and all the other features of Trade Ideas, including back testing, the AI channels, all of that good stuff. We have a series of webinars during the day to help you get oriented. The $8.99 covers your exchange fees for the real-time data and the added support that we provide. So it is a great opportunity, and there won't be another one until later on in the spring. So take that opportunity to try premium next week. There's a series of ebooks. Steve and Andy both contributed chapters to it. Trade-ideas.com/setup is where to go to download those ebooks. They have 2 chapters each. Each book's organized by topic, and there's cloud links to add some of the concepts that they discuss to your layout so you can try them yourself. We got a podcast. We just put up an episode last week to start out the year. It's actually a special guest episode where we have an interview. You can add Trade Ideas Podcast to your subscriptions by just searching for the name Trade Ideas Podcast wherever you listen to your podcast. Hit the subscribe button, and might have a new one up this week. Check it out. We got a code that's good for 15% off all month long. New TOW, all caps, saves 15% off your first month or year of Trade Ideas. Also good for an upgrade from standard to premium. So if you want to get started right now, instead of going to the test drive, just use it. Great way to start out. If you have any questions, email us, info@trade-ideas.com. You can bug Steve on Twitter @TodayTrader. Ask him all your questions. We also have @Trade Ideas and some other handles. If you follow one, you see some of the others. Facebook.com/Trade Ideas Pro is a Facebook page to follow and see news that we post there and share that stuff with your friends. We recorded this webinar, so we'll have the recording up later on tonight or tomorrow. Stay tuned for an email and linking you to the playback. Thanks, everyone. Thanks, Steve. Thanks, Andy. Have a good one.
All right, see you next